Good morning. Good morning. I don't know why I'm yelling so early in the morning, but before we actually get started, there's a little bit of building being done in my current place. So there are workers outside. So if you hear some loud noises, it's because of that, okay? Yeah. I tried to wait as long as I could, but it didn't seem like they were finishing up anytime soon, even though they kind of made it sound like they were, but whatever. Good morning, Naj, London Man, Zogs, Kilo, Ren, LD, Chop, Andaman, 0x Ether, Alex Strands, Derek Fang, Shannon, Justin Connor. Nice to have you guys. Let's see. Sad Kayon. What's up, bro? Drew, Mohammed, VS Luis is in the chat. Alright. Sue Sachak Sim, Fern, Eller, Spiced Vengeance, Chris Peck, Ashwani, Goldfinger. Good morning, afternoon, evening. Welcome everybody to the FOMC stream. We probably will be live for a little bit of the stream. We won't be live for the entire FOMC, just because, you know, it's probably gonna last like another hour, but we will be live for a portion of it, at least to see the reaction on Bitcoin, right? So we'll talk about what we expect and what we hope to happen and what we'll do if it doesn't happen, right? So the usual stuff like that. Bob Johns, good morning, bro. Brian, Degen Wrecked, Umesh. Nice to have you guys. Welcome, welcome, welcome. We'll give this a couple minutes, okay? We'll give this another 2 minutes and then we'll get started. It's a bear market. I don't expect the numbers to be exceptionally high today, with or without the FOMC. Especially when you consider the last 4 days have looked like this. I don't think anyone's logging on to fucking trade crypto, okay? And if you look at things like even, you know, like Tesla, right? It's like, it just doesn't seem like people would be interested in not trading this and trading this, right? Like, it's just night and day difference, even though they're both tech, even though typically speaking in the bull market, they were all kind of moving together, right? Yeah, you can take a look at the S&P. Oh, Jesus Christ. Yeah, the S&P looks, look at this, just wow. It looks a lot better, right? I don't think this is the reversal that everybody thinks it is, but whatever. We'll see, right? Obviously it has to clear a couple more hurdles, and I just don't see it doing that just yet, but we'll see. If there's a, you know, a pause on the rate hikes, which is, you know, pretty sure it's gonna happen, you might see another squeeze up, or maybe this is the anticipation of, you know, the pause. I don't know, but I want all people who are trading traditional markets to get fucked and all this money to flow back into crypto. That's the plan. J Dogger, good morning, bro. GB, Olin, Tommy Guns. Alright, cool. 4 minutes in, let's get started. Typical housekeeping stuff. VS Luis is in the chat, so he will be recapping it after. I'm even going as far as having Bob Johns, my #1 editor, the greatest editor in the world, to provide some, you know, like a condensed stream as well. So if you guys do miss it and you guys do not wish to watch the full length one, there will be a condensed stream probably, okay? And if you have any questions, any concerns, anything that you think I could answer, even if it's like a, hey, why are blueberries better than mangoes or whatever, right? Like, just ask and I'll try my best to answer it. But yeah, let's get started. Alright, so this was the chart from yesterday. I'm not going to go ahead and redraw it because there's a detailed explanation of it in the daily market thoughts that's pretty, it's pretty succinct and straightforward. If you haven't seen it, please go check it out. I'm going to leave this here. I'm going to break it down just a little bit. So we're looking at this area as a reclaim, as it is the low of the prior structure, and it is kind of where prices began to fall, right here, right? So our first sign of strength would be prices reclaiming here. Obviously, a real sign of strength would be prices reclaiming the SEC nuke, right? Because that would just be the market kind of telling you that, hey, I don't give a fuck that the SEC sued Binance or sued Coinbase or whatever's happening with Binance US, right? That price doesn't give a fuck because this was priced before the news, right? So if prices trade up right here, it's fair to say that price doesn't give a fuck about the news, right? It's irrelevant in terms of price. It's relevant in terms of maybe regulation, in terms of maybe consumer confidence, but in terms of price directly, irrelevant, right? Next, we're talking about this support area. So this support area is if prices drop right here, I just don't see this holding, right? Either we reverse from here or we're going straight down to 21-ish, 22 maybe, right? And my dream scenario is we just take every single stop, right, with some cataclysmic black swan event. Maybe, I don't know, somebody gets wrecked really hard. An exchange, a very large entity that's not an exchange. Who knows, right? Or some kind of hack or whatever. Maybe some DeFi, off-chain, bad debt. Whatever it is, I think it would take something of that magnitude to send prices down to this level. But I'm not writing it out, right? So what I'm hoping for is if we nuke, this doesn't hold, and then we get bids much lower, right? So this is the scenario that I've drawn out. Now let's talk about FOMC, right? That's more of a, I guess, a shorter term outlook. So I'm gonna go ahead and I'm gonna clear everything. Okay. So we'll go into the hourly, right? Let's talk about where we want to bid FOMC stuff. So we'll start off by marking out just key levels, right? We'll mark out key lows. When we talk about short-term buying, it's almost always, at least lately, right? It's gonna almost always be stop loss levels, liquidation levels, and just obvious levels that need to be ran where people would get stopped out. Or maybe, that doesn't mean they would get liquidated, but it's key structural levels, right? So I'm gonna go ahead and just mark them out. There's no, right. Alright. So these are the lows, right? Like the obvious lows that we have. I'm gonna go ahead and mark out the highs. Use this. Okay. Let's use these two right here, okay? Now, I know this seems like, oh man, it's a lot of fucking levels, right? So what you're looking for is, you're probably not getting this, right? This is unlikely. Right? And then on a scale of maybe, 1 through 10, I would even say this is unlikely. Right. So I'm not gonna place too many bids down here, right? So now that I've determined, okay, well, if prices come down to these levels right here, these are probably the most likely buy the dip areas, with this being, like maybe like a 50-50, right? So to say the least, in the short term, if we get a nuke leading into FOMC, right? So some crazy move like this, and I know this is on the hourly, so it's not literally gonna look like this. It might just look like this, right? But I'm looking for small bids 25.8, small bids 25.7, and some medium-sized bids on 25.6, right? So that's about 2% or so, roughly, like 1.5, 2%. Okay, these are areas I'd be likely to buy the dip. If prices come down here, maybe I'll scoop some up, but if they come down here, I'm fucking scared. I'm absolutely scared, because with the same logic that we had, okay, when we looked at the daily, right, that's prices losing this area, and we just kind of talked about why I don't think this area would hold, just because we've had such a controlled sell down right here that I could see acceleration through this level, because it's such a massive level, right? So I could definitely see acceleration if we cut through this support right here, which is why I don't really want to catch the knife right here, just because it could end up being just like Litecoin, just like all the other altcoins, that once they lost a certain level, it just slipped 20-30%, right? And I'm not saying Bitcoin's going to slip 20-30%, but it might slip 6, 7, 8%, right? And you might have a large red day. That being said, I already kind of talked about where we want to buy the dips and whatnot, so I'm not gonna repeat that. Alternatively, I don't want to short either, and I know this sounds weird, but I don't want to short, despite, you know, me marking out, okay, these are the highs, whatever, right? And I don't necessarily want to short either. But if you had to short, I think this short would be the most comfy short. These shorts right here, okay? This one's up to you. If you really want to be aggressive, I'm personally not going to do it. But I'm looking at 26.3, 26.4 to either, you know, short or maybe hedge any open longs that I have. And that might depend on what your current exposure is and what your overall outlook on the market is as well, right? So mine is pretty neutral. I don't think the recent price action is incredibly bearish or incredibly bullish either. I think it's just an empty market where people are repositioning their funds, maybe from crypto into traditional stock markets, right? In a time where things are a little bit more uncertain, people are taking off funds from exchanges, maybe cashing out, waiting for a better day, right? I don't think it's people are so bearish Bitcoin. I think it's a more, people are uncertain of the current environment, what it might mean if Binance is actually guilty and gets shut down, right? I think it's a very normal human reaction to protect yourself in cases like that. People won't protect themselves from a bad trade, but they'll protect themselves given that FTX just happened and the memory is still relatively fresh. And I think that plays a lot into how people are positioning. And this is the first time that you've seen a decorrelation from traditional stock markets, and I do think there's a reason for that, right? And I would like to attribute that reason to the fact that Binance, the literal largest exchange, and then Coinbase, one of the largest on-ramps, especially for US citizens, right? And I just think there's a lot of uncertainty, and people are protecting themselves by not being too active in the markets, right? Taking profits, maybe just getting the fuck out for a little bit. So that's probably why prices are dead, right? I don't think there's some evil whale out there holding price hostage as traditional markets pump. That being said, if you have any questions on that, please let me know, but I'm gonna go ahead and move on to Ethereum. Okay, we'll do ETH. Let's see. So ETH absolutely shut the bed, similar to Bitcoin, right, where prices have just been stagnant right here. I'm gonna go ahead and remove this. This is just random scrambling or scribbling. Good. For ETH, if you're looking for longs, this is the level to reclaim, like 100%. This is 1790. This was the lowest part of our buys, right? So we wanted to buy within this range. The moment it broke this, you just, you basically had to get the fuck out, right? It was even nice enough to give you like a bearish retest right here, but other than that, it just didn't make sense to stay in this after it lost that range, okay? And it still doesn't make sense to really buy it unless you're looking at, right, lows here, lows here, lows here. Alternatively, you could use these lows. I'm just using the closest ones. I just think these levels are unlikely anyway. Unless something really bad happens, you're probably not going to get these levels, right? These are your immediate levels of interest, which is still 10% away, which is quite a large amount, right? Like, so that's 7%. I guess if like 7-8%. And then down here, it's like 22% away, 16% away, right? So again, it's a long ways down, and I would rather not plan for prices to reach this level, but I'll have these marked down, right? So we have areas of interest down here, but these are the two areas that we'll look at first. So if you go into the 4 hour, right? If this structure breaks down, you're probably looking into the 1600s right here, right? So the mid to lower 1600s make for a decent knife catch, but again, we don't believe in knife catching in the traditional sense. Anyone who's telling you to knife catch certain levels they haven't experienced this kind of market where knife catchers are just getting nuked because of the empty liquidity and how quickly things move, okay? What you want to see if you're knife catching is something like this, okay? Knife catch here, right? Or knife catch here, right? Or even, right, knife catch here, right? But not the initial drop, because you don't know how far down it's gonna go, right? And I say that for good measure. So if you look at pretty much any of these nukes, right? Yes, you could have knife caught right here, right? But it'd be much better if you just knife caught like when prices traded above this level, or at least showed a higher low, maybe right here or right here, right? Yes, you're not getting the bottom, but again, it's about making the highest probability trade while still being able to protect yourself, right? And if you knife caught right here, I just don't know where you would, like, where would you cut this position if you're wrong, right? And this is where people end up taking such a huge loss that, it takes them back 5, 6, 7, 8 trades. And that's not what you want as a trader, right? You want the opposite. So, oops. Okay, so that's the knife catching side. If you're looking to short, the logic is the same, right? The logic is absolutely the same, which is instead of wanting to see strength here and seeing like a level reclaim, you want to see weakness here, right? You want to see prices come up here, struggle to close above it, right? And then maybe you're short 1780 instead of 1790, right? And then maybe you get that leg down to the 1600s, right? So that's the move. John Smith says, why are we thinking it dumps if they announce a rate pause? First one in a year. I want to say that part of the reason why every market besides crypto is pumping is because people are anticipating a rate pause, right? Could it be the case where, rates are paused and prices continue to go up again? Yes. But I would just like to follow the same formula that I've been doing for over a year, where essentially I'm assuming that whoever's left in the market is very in tune with the market because they're able to survive for so long. They're able to read up on certain things, they're experienced, they're vets, they're making money in an otherwise very difficult environment. And because of that, I would like to think that they're smarter than other people and they have effectively front ran the price. They're not waiting for the news to come out, they're positioning just in case, and then they'll react once the news comes out, if there is a rate pause or not, right? So that's what I'm going for. Again, nothing's guaranteed, and you could absolutely be right. So yeah. Olin says, hey Loma, I'm short from 26.5 and long from 25.5. I'm short for if BTC broke down and the long was a hedge. Scared to be stopped out both ways as I feel entries are not great. How would you manage? So for Bitcoin, you have a 25.5 long. That's literally the bottom. Okay. You have a short from 26.5. It's literally the top of this breakdown. Okay. Okay, so my man basically said he's short here, he's long here, and he's afraid that prices will stop him out both ways, right? I get what you're saying with the with how crazy FOMC could be, where we absolutely could go, right? We absolutely could do some crazy shit like that. If you're long hedged, I think you take profit on some of the longs the moment prices cross this area, right? I think you take profit here into your short, just because your short would be, your long is playing out and your short already played out, right? So it's one of those things where I do think you take profit on the longs and then you maybe wait to see what happens here with your short, and if it goes up, then yeah, I guess you're stopped out on it, right? There's not much you can do. Alternatively, if you if you're leaning bullish, then yeah, you might want to close out your short and then maybe open a long if prices come down here, right? And that's the nature of having a double-edged sword, right? Either way, you're not going to be able to, not usually anyway, you're not going to be able to fully maximize profits on both positions, right? Sometimes it works out in the case of maybe fundamental news or some type of FA that allows you to do that, or maybe like you're short Bitcoin, long XRP because of SEC, right? And then it plays out in both directions because they're inverse correlated. That might work, but in terms of the same asset, it's very difficult. Okay, so yeah, it's one of those like pick your poisons, right? Like you basically have to commit, or else yeah, there might be a possibility where you hold on to one position for too long and then you get stopped out. It happens. Let's see. Let's do some shit coins real fast, okay? Let me finish ETH. Let me actually finish ETH. So a short-term long setup for the FOMC would be, in my opinion, right, these lows right here are very free. Like, they're very free. I think if prices swoop these lows and then manages to show strength, so I marked that out on the hourly, but this is the 15-minute, okay? So if we start to see some strength around this area, this is a good buying opportunity. I don't think FOMC will lead to more than a 2 or 3% move down. That's usually the cap, okay? So we see most FOMCs, when price moves, it's about 2-ish%, okay? Average, okay? So that's 2% down, 2% up, right? So knowing this, and I don't remember what the exact percentage was. I think it was like 2.4 something for ETH, 1.8 something for BTC. I saw it yesterday based on the data from like the last fucking year, but yeah, it was something like that. But basically you can make certain assumptions off of that, right? Because it is a sort of, I wouldn't say it's like a very good edge, but it is an edge, right? Where you have some sort of baseline expectations for price. So if you look at this, this is probably, whatever time frame you want to look at, right? So you're trading purely on the 15-minute, you don't have anything else marked. You're probably looking at, oh, okay, well, if prices swoop below here, that probably is, around that outlier, maybe that 1%, 2% would be pretty far down actually, right? So it might be skewed too, because again, we had FOMC back when prices were significantly higher, right? And it would drop maybe like 5, 6, 7%, bounce 3, 4, 5%, right? And lately it's been less and less effective. So that's also something to keep in mind, where averages are built from, you know, a year ago to now. And as the FOMC kept happening, prices began to become less receptive to it, right? So that's something to keep in mind as well. So just make sure things add up, you know, like make sure things make sense, and then you can have a flatline expectation for things. Let's see, we long ETH, maybe. I personally don't even care to long ETH. I actually want to long these little shit coins like Radiant or Rodent or whatever, Render, things that you can get just small positions in, because that just seems to be what the meta is right now, right? And there are certain metas that you have to adjust to when you're trading shitcoins, and just unfortunately right now there's just that terrible fucking shitcoin meta where things like Tomo Chain, Metal, are all moving at, you know, fucking 20-30% at a time. Things like ARPA, EDU, Lena, things like that, all pumping, right? And they're not good coins in my opinion, but they offer opportunities. So in that sense, they're very good. Okay, so we'll talk about a couple of them. Let's do Tomo, Metal, Render, and Sui for the chat. Okay, so we'll look at Tomo, and I'm gonna look at everything today in the 4-hour and the 1-hour chart. Okay, we're not even gonna look at the daily. It just, you know, it doesn't really make sense, because the daily, like, yes, it does look very good, but there's just not much that I can really say for most coins, just because most of them have just been sitting sideways anyway. So I think you would want to buy the dip on Tomo. Yeah, let me see. I think you would want to buy the dip on Tomo for whatever reason, whoever's fucking buying Tomo. The dip, in my opinion, would be something down here. Okay. Okay. So if you really had to, something like this for a small bounce makes sense. This is kind of worrisome, right? This is kind of worrisome right here, but Tomo looks like it has a lot of strength relative to the rest of the market. Right, so do anything but buy here. Just don't, you know, just don't buy here. Don't buy here. I know this is showing strength. Don't buy here. You either wait for it to come down or some type of like structure above. But if you didn't buy anywhere down here, any of these reclaims, right? And I know Main also uses this setup, and he always patents it with like a cool fucking blackout background and like a signature thing. But essentially what you're looking at is level reclaim, power of 3, the fucking magical main squiggly, right? Like all these things where this is price, okay? Right? Is this like, I'm basically just redrawing this, okay? I'm basically just redrawing this. Right, and then you see price right here. This is your entry, right? Right, and this is basically your power of 3 as well, right? This is your level reclaim, power of 3, all inverse head and shoulders, whatever you want to look for, right? Look, oh, it's an inverse head and shoulders, shoulders, head, shoulders, right? So my point being is that if you didn't enter the setup before, don't fucking enter it now. You know what I'm saying? Like you're late, and that's part of trading, where it might look really scary right here, but this was the point where you should have been entering, right? And a lot of people, and I'm not trying to pinpoint any one person in particular, but I've noticed that a lot of people don't care for setups until they've already moved. And I know that that's a natural behavior, right? It's not something out of the ordinary or something. It's not like you're fucked up and something's wrong with you. But you have to understand that when things are already moving, theoretically the reward for them is a little bit lower, right? And it's harder to time because prices have already expanded, right? If a setup is this and you didn't buy here and you're buying here, technically you're buying the tail end of the setup, right? And you're praying that this setup leads to another setup, right? Maybe something like this, right? And you're essentially, you're more gambling than you are having a trading strategy, is what I'm trying to say. So again, sometimes the best trades are the trades that nobody's interested in yet, right? But it offers a good setup. And I noticed that as people begin to become better traders, I even see people like Mitch. Okay, so I hate to use Mitch as an example because he's fucking insane. But you guys, if you're in the Discord, you probably know who this motherfucker is, King Mitch. He's chaotic as shit. But what you're basically seeing, what I've noticed with him is when he first joined, he would be doing trades like these where he would buy this. He'd be like, oh yeah, this coin's up fucking 20%, it's gonna keep going up, let's fucking go, right? And this would be like his fucking entry right here. And nowadays, I've noticed that as he's grown as a trader, he takes trades kind of like right here, and he'll be just as euphoric, if not more euphoric, than when he used to buy up here, right? And this is just an example right here, but it's about timing and finding your setup earlier, right? It's just about being earlier to the punch. It's about setting yourself up before the trade has actually played out, right? And part of that just comes from one, being diligent with the market, and two, knowing what your setup is. Sometimes you don't know what your setup is, so it's very difficult to know what you're looking for if you don't even know what the setup looks like to begin with, right? So again, that's why I always tell people, if you're new, I think Trader Main's streams are one of the best in terms of, well, I can only speak from my experience because I do mainly price action and whatnot. I think Main's is the most technical and explained systematic stream that you're gonna get in terms of explaining, hey, this is a breaker, this is why I'm doing this is an order block, oh, this is a, this is a market structure break, this is a blah 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 blah, right? Like whatever he's talking about that day. But you first start off systematic, and then you slowly start to introduce different discretionary variables into your trading to fine tune it, right? And I have a terrible way of teaching discretionary skills, but it's very difficult to teach discretionary skills because it's all different for every single one of you, right? Like for VS Luis it's different, for GB it's different, for fucking Goldfinger it's different, right? Like there are some things that Main does that I'm like, I wouldn't do that, but it's a discretionary thing, right? So, and vice versa, I'm pretty sure there's some things that I do that Main is like, what the fuck, why is it right there, like why buy there, or why not buy there, etc. Let's see. Fern says, how do I draw out my blocks? What am I looking for? So I always try to understand the reason for certain things, right? So the reason why order blocks, the reason why support and resistance is important, okay? The reason it's important is because you're expecting price to react at that area, right? That is the literal reason why you draw anything. And it's very important to get to the source of why you do things, right? Why do you buy here? Because you're expecting a reaction. Why do you sell there? Because you're expecting a reaction. Why did you buy that support? Because price has reacted there, right? Or whatever reason, right? You're expecting a reaction at key levels, and you're marking them out with your understanding of what the market has done before, whether that's an order block, whether that's just a regular rectangle, whether that's the Elliott waves, like, oh, this is a 618 extension, right? This is the Fibonacci level, this is the fucking you know, the stars and the moon are telling me that this is probably going to lead to a bounce, right? Different ways of understanding things, but what you're essentially all looking for is an area where price will react, right? So when I drew that block, right, this area right here, I'm just looking at an area where prices have reacted before, right? When you take a core concept down to its fucking, like, to the absolute basic concept of it, right? Like, just turn it fucking granular. Take out all the names that people have given it. Just understand the fundamental reason for why order blocks are there, why rectangles are there, why all these support and resistances are there. That's why, because you expect a fucking price reaction, okay? So this rectangle is here because prices have reacted to this level before, right? So that's why. And I realize FOMC is about to start in about 5-6 seconds, okay? But yeah, sorry, I kind of went on a tangent there. We do have a couple other coins to look at, so I'm gonna try and speed through them, okay? Sorry, I need to get through them before fucking FOMC hits and all your bags nuke or pump. Metal doesn't look that bad. Ideally, you want to see some strength above this, but if we do get a pullback, I do think 115 would be very decent of a buy, right? Just something like this. Your invalidation would be anywhere below here, to be honest, which is about 3 or 4%, right? So if you enter here, your stop loss should be down here, and you're looking to ride it up to maybe up here, and then debatably up here, right? Depending on how volatile things are, because we have seen situations where metal does just kind of skyrocket, and this does look like a good base, right? It does look like a good base. And if you notice, like, this actually just coincides with the support very well. So yeah, I'm looking at 115 if we get an FOMC pullback to buy metal. I think that's not a bad pick. I don't know what the fuck is going on with the project though, okay? Let's see. Render. So I kind of looked at render too. Yeah, we got fucking destroyed here. I think this was a, oh yeah, we're talking about distribution right here. Yeah, we're talking about distribution. I think. Yeah. Okay. So this is the 4-hour chart. Render actually doesn't look terrible just because this has always been the logical area for these distributive schemes to play out, right? So if you look at, you know, EDU and all of that as well, you know, you see the same thing, you see prices distribute all the way back to the origin, right? So this is the origin right here. Right, so this is the consolidation, this is the origin of the pump, the retest, bounce, right, this is the first origin right here. And yes, you can argue like, oh yeah, the origin was down here, but you know, that's they're just different structures, okay? But yeah, so this has been a great area for prices to bounce. I think I don't think it's gonna do the same thing again, but maybe at most you'll see like a 210, right, 215 or something. It depends on the rest of the market, right? But these coins do tend to fly, right? They do tend to have these wicks just because they're not that liquid, and people do FOMO in, right? Similar to what we were talking about earlier when we when we're talking about Tomo, where people tend to actually buy as prices come up here instead of like down here for whatever reason, right? For whatever reason, maybe they're just not, they just missed it, and then they see, oh my god, well, it's up, you know, it's up what, 8%, well, I'm gonna long it, right? And then that's why their risk reward is always ass cheeks, and they might make money, but you know, if this is your setup, right, your RR is like 1 or less, right? I mean, I guess you can adjust it to be 1, right? Right, like your RR is pretty shit. So yeah, it's a terrible trade. But yeah, that's how I would play RNDR. I think something like this, you know, this consolidation right here offers a good channel for you to just bid, because if you're wrong, you just get the fuck out. Like, you need to have a hard stop loss though. You need to have a hard stop, okay? So yeah, TP1, TP2 right here. Okay. So this is on the hourly. So TP1 210, TP2 to like 15, 18, 20 around there. Good. All right, I'm gonna hop on Bitcoin for now, okay? Because we need to. All right, let's do this. Oh fuck, I fucking cleared the levels that I marked out. Fuck my life. Okay, hold on. Let me remark it. Fuck. I think these two immediate levels are okay. I'll leave this just for shits and giggles. All right. There we go. All right. What's the news, boys? Hold on. I'm dependent on you guys right now because I'm on stream, so I can't. Hold on. Actually, I can pull up another tab. Unchanged at 5 to 525. Unchanged. Rates are unchanged, baby. Wow. Oh, fuck. Okay. Oh no. I want to see what alts are doing right now. What's a good? I think Litecoin might be. Ooh, that looks so good, man. I wanna bid so hard. I also want to bid here, to be honest. How's traditional markets doing? Oh, I fucking told you guys. I knew it. I knew this was a rate pause pump. Holy shit. Now, it'd be real funny if shit just started to rotate. Please. We'll do the last couple shitcoins after, okay? We're all busy glued to the 1 minute chart right now. Sorry. VS Luis, can you share the stream link in the market discussions if you haven't? Let me see. Just so I can click on it, or you can send it to me too. I feel like this is all gonna pump up, to be honest. Oh god damn it, we're all just stealing PC printable shit, huh? Alright. Let's see. Oh, okay, alright, oh no. Alright, so what we want to see now is actually, after the announcement, prices actually just start to fly, so And when I say fly, I mean relatively speaking. We're on the fucking 1 minute, right? So this should have been a fill. Fuck, man. I'm on stream. I can't. Let me place bids real fast. Sorry. So this is where I want to really get filled, right here. And then there's a 25.7 area somewhere down here. So if I go to right here. And then this is the more unlikely one, right? So anyway, all right, okay, all right. I set bids via mobile. We'll see how everything goes. Petro says, "What is this sound?" It's fucking music, bro. What do you mean? What do you mean? What do you mean? What is this sound? Are you talking about my fucking voice or the fucking music, bro? What is this sound? Oh man, you guys are fucking hilarious. Where? Okay, somebody has to have the stream, right? Let me see. Great question. Sad Kion, my invalidation is if we go in the hourly and if we close the hourly below this, I'm getting the fuck out. Just because, again, I don't think prices, if it comes down here, it's gonna hold, okay? Oh yeah, it's for sure the construction, bro. Yeah, I have no idea. Yeah, there is like a little like a bass in the background. I don't know, they're fucking cleaning the streets or something, bro. Some insane shit. That's crazy that you guys can hear that. That's honestly insane that you guys can hear that, because I could barely hear it. Oh no, it's over, guys. Oh, crypto's dead. We're down 0.2%. I don't think my heart can take it. Oh my god, it's over. Okay, hold on. I drew too many fucking lines, so let me go ahead and we're gonna jump to the 15-minute, okay? So that we can kind of visualize things. Oh my god, I just got filled. Oh. I just got filled. I'm so scared. I'm so scared right now. Alright. So safe to say the upsides right here are not happening with FOMC, right? So, alright. Oh my god, I just got filled again. Oh my god. Oh my god. I think this is roughly... whatever that is, right? So I literally put 10 and 10, so... Oh! I'm rich! I'm rich! I'm poor. I'm rich, I'm poor. Yes! 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 No! 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 Ah! I'm rich. I'm rich. We're good. As long as prices, honestly, we have 5 minutes. Dude, this looks good. This looks good. How much am I up? Let's see. So my average should be literally right in the middle. I'm up 0.22%, bro. Oh my goodness, dude. Bro, did we just call the absolute bottom of this? Alright, well, let's talk about the upsides, okay? I don't think it's premature to talk about where price is going up here, okay? I know where prices are going, bro. Holy shit, what is going on outside, bro? They are literally cleaning the streets, bro. They are literally power cleaning the streets. That's beautiful. My neighborhood is fucking clean, baby. So, immediate areas of interest, right? FOMC highs are right here. Well, technically, like right here. Okay, so FOMC highs are right here. I expect prices to kind of travel up here, maybe not take it, because this is an emotional reaction, right? Emotional reactions tend to overextend. So, I'm not expecting prices to just like rocket up here, but this would be if you're trading the 15-minute and you're scalping FOMC, right? Like you're taking these low time frame trades, you're not holding it as a swing, you're not making it like a intra-week trade or whatever. You're not using FOMC as an entry to get in higher somewhere else, right? Or I mean, sorry, to stay in longer and take profit somewhere else. I think 26, just above 26 would be a good area, right? So it might look something like this. Oops. Sorry, baby. We're getting our streets cleaned, so there's a lot of sound right now. My bad. Something like this would be really fucking nice, but ideally you want to start taking profit here, right? I know a lot of people are like, oh, but you need to take profit right here, right? This is the bulk. This is like the crazy move, right? And you can have some in the bag, but I do think it's wise to just take some profit in a market that's been very punishing for people who are greedy in both directions, okay? Hopefully there's not too much bass or sound back there. My apologies, guys, if your ears are fucking dying because of it. Let me see if I can Is it really loud? It's not really loud for me, but I can imagine having like a little bass in the background being really fucking annoying. But I'm definitely not gonna go out there and tell them to not clean my streets. So that's not happening. All right, 1 minute chart. We're on the 1 minute chart. Oops, 1 minute chart. So we want to assume this is just like the last. FOMC CPI thing, right? Where you're gonna have a revisit of the lows, right? And we just hope that we don't see any closes below here. So now the trading strategy kind of changes a little bit because we have gotten filled, right? What we don't want to see is prices closing below here, right? And you can look on 5 minute chart or whatever. So if I clear everything, right? This is the low that you ideally just don't want to see prices continue to close under. And I'm sure there will be situations where it comes close, right? Or maybe it wicks below, closes above, whatever. But again, we don't want that. And what we do want is FOMC highs. So I'm gonna go ahead and mark that out for you, okay? So emotions tend to act as good anchor points because these people are probably buying in, not on a logical or technical basis, but just because, oh my god, there's a rate pause, I'm gonna fucking throw my buys into this, right? And then they get used as liquidity for this down move right here. Secondly, so this is about 26. This is about 26, right? So this is where you're looking for prices to come up to, probably right after FOMC. So within 45 minutes to an hour after FOMC, this would be probably the area that I would take profit. And if you guys have a different opinion, like maybe you guys want to use this FOMC entry as, you know, fodder for maybe like the 32k or whatever, more power to you. But I found a lot of success in just sticking to a plan, right? Like I am trading FOMC. That means I am trading the pre-market FOMC, the post-market FOMC, and I'm not holding that as like an intra-week swing or whatever, right? Because now I'm just meshing together two fucking ideas that are totally different, right? Totally different time frames, totally different expectations, totally different catalysts potentially, right? So it just doesn't make sense to do things like that. But if you found success doing that, more power to you. I am just speaking from an area or a place that's worked for me, you know? And I know we're coming up on an hour, but we're gonna keep watching price for a little bit. And I'm gonna go ahead and ramble about, you know, just general stuff. I honestly really enjoy the FOMC streams more than any other stream, just because it almost feels like we're all friends sitting together watching the same asset, you know? And I don't know how to explain this, right? But it's kind of like it brings on a form of camaraderie, you know? And it might be cringe, it might be corny. I don't really care too much, right? But I will say this. It brings back a lot of fond memories for me, personally. I'm probably older than some of you guys and probably younger than some of you guys. I'm probably like the median age, right? I'm sure there are people who are like fucking 40 in here, and then I'm sure there are people who are like fucking 18, 20 or some shit, right? And I'm probably just somewhere right in the middle. But my point being is that, you know, I feel like this job or this career path, you don't have that many friends, right? Like you don't have that many people that you can talk to, you can trust. You're anonymous for a reason. Oh my god, why is Bryce doing this? I'm trying to... This is that higher low we're talking about. But it's scary every single time. Trust me. I'm just giving you my inner monologue, but it's scary every single time. I'm assuming that this is the emotional reaction as well. Okay, so the same way that you can do this. Hold on. Right? It's the same logic, but just reversed, right? It's the same logic, but just reversed. But anyway, what I was saying was, as you get older, anyway, and I don't want to sound like I'm fucking old, but at least for me, I've always kind of been weird in that sense. I probably have like 3 or 4 friends that I can probably, you know, reach out to and actually talk about things and just, you know, call them and it not being weird, you know? So, you know, just having exposure to you guys, being able to sit in a chat, stream shit together, talk shit, make fun of certain things, laugh together, it actually means a lot, you know? Because I think, you know, everyone's busy with their thing. Nobody fucking trades the markets like this, dude. Like, you talk to anyone that, you know, trades or whatever, and it's always some degenerate shit like, yeah bro, I threw $50 into Apple and you know, I made $5 or some shit, you know, or yeah, I have a 401k and blah 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 blah. But it's cool to just know for sure that everyone that I run to in the Haven has a similar interest or similar hobby or similar lifestyle even, right? and it's just reassuring. It makes life a little bit more enjoyable during these moments, you know, because otherwise, dude, imagine like I'm just sitting here staring at the 1 minute chart like this, not talking to anyone. It's like fucking boring, dude. Yeah, it's like I'm watching like a Super Bowl game, right? With like not just like one friend or two friends or three friends, but like fucking like 40, right? Or however 65 other people in here, right? And we're just all, you know, everyone's doing their own thing. I'm sure there's somebody that's fucking knocked out in the corner like every Super Bowl game. There's someone who doesn't even fucking watch football, but they're just here for the entertainment. But that's kind of why, like, I always tell you guys, like, I genuinely do appreciate you guys, because as I do get older, I do, you know, I do experience the same things that everyone before me talked about, and I never understood. I was like, what are you fucking talking about, bro? I have so many friends, like, I don't know what the fuck you're talking about, like. And then you get older and it's like, your friends get married, they move away, different career paths, right? And then you also work a fucking job that you don't know anybody. Everybody's a fucking picture. Like, there are a couple people that are docs, but they're all assholes. Like, imagine being friends with BitBoy. Holy shit, I'd rather just be friendless, right? It's one of those things where it's cool. But anyway, we have our lower high formed. So this is pretty good, right? So, and for what it's worth, I'm not saying that there's anything wrong with you know, having a lot of friends or not having a lot of friends. I'm just saying, like, that's been my experience. And I know I'm weird anyway. Like, who the fuck wants to sit around and watch price action like this instead of getting, you know, fucking wasted or some shit at like a bar or some shit. So, you know, working from home, having a weird career path definitely lends itself to very different life circumstances, and I fully understand that I'm the weird one here. Yeah, I do think this is the higher low, right? So if you guys take anything from this, just know that this doesn't have to be FOMC based, right? Where the highs and lows of emotional knee-jerk reactions, whether it's an FTX blow up, whether it's BitMEX liquidation engine, right? Whether it's Binance being sued by the fucking SEC or whatever they're sued by in the future, right? A lot of those things force emotional reactions, right? Because they're strong, loud headlines that make people emotional, and they're divisive, right? Like, if you've ever seen like the timeline after one of those kind of events, it's always like there's like 70% of people obviously going with the very obvious argument, like, yeah, Binance is fucked, and then there's like 30% who goes, no, this is a nothing burger, they're not gonna do shit, like the SEC couldn't even sue Ripple, like they're not gonna be able to do shit with this, right? And it causes a lot of divide, and that's where the emotions come in, right? It's like most people are very cool until you start bringing up political shit, and then it's like, oh fuck, like he's getting really pissed or he's getting really mad, right? And it's very uncharacteristic because they're suddenly getting very emotional. Same way with the markets, right? Where most people probably wouldn't buy this area, right? They wouldn't buy this area, but because of certain headlines, oh, rate pause. Okay, well, I'm gonna FOMO anyway, and they make a bad decision because of it, right? When what should actually be happening is you hear, okay, rate pause. Oh, that's pretty bullish, but given the context that everything besides crypto had been pumping leading into this, maybe that's a front run, right? But maybe you'll position for the long side because, you know, maybe on a pullback, this is when you want to buy the rate pause, even though the news came out like right here, right? Right? Similar to the halving, right? We see that all the time where leading into the halving, prices go up, halving hits, and then it comes back down, and then this is usually when people are like, yeah, I told you the halving's fucking trash, blah 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 blah, it doesn't do shit. right? And then you see the difference in supply and demand start to pick back up, right? So maybe this is your halving play, and this is your halving play, and this is when the news came out, right? So, and this is when the news came out. So the halving play happened before the halving and after the halving, but very rarely does it happen during the halving, right? So hopefully that kind of makes sense. With these kind of big headlines, you want to think a little bit deeper, right? Like layer 2 thinking, if you will, game theory. But yeah, that's how I would personally approach everything. And I know we're past an hour right now, but I wanted to just make sure that prices were, at least giving this close right here. So this seems to be okay for now. This is on the 1 minute, so everything looks very exaggerated, but I'm sure it looks a bit better. Yeah, it looks a bit better on the, fuck, I don't want to clear everything. Right. So it looks decent on the 5, where we're managing to hold the lows. Every time it pokes back down, we are getting some type of bid. So not too bad. I'm gonna go ahead and probably close out the stream here. I do. What? Yeah, the Dixie's pretty strong. Nah, listen, bro. Like in any other world, I feel like this is a good short opportunity. So this goes in line with our setup, right? But if it was like this, I'd be a little bit more worried, right? Let's see what the SPY looks like. Should bounce. It should give you the bounce right here. It honestly should give you the bounce before it's gonna, come down here maybe, right? But this bounce should be enough for you to hit your 26.1 targets on Bitcoin, right? Let's see. Loma, do you use CVD, the cumulative volume delta thing? No. I don't use CVDs. They're useful. I think people just extrapolate too much on it. It's not the holy grail indicator that everybody thinks it is. Similar to volume, right? Like a long time ago, people used to always have volume on their charts, and it would always cause these like kind of like false positives, right? Where it's like, oh look, volume's going down, price is going up. That's really, really fucking bearish, right? But it's not. It's not always that way, because it could also be interpreted as it doesn't take much buying to send prices up, which means selling is non-existent, right? Or like aggressive selling is non-existent. Let's see. Is it okay to try to see large time frames and pretend it's like the 5-minute chart to try and understand that way? Yes. I truly believe that prices are fractal. There are certain things on lower time frames that you will not see on higher time frames as often, okay? And I'm very particular about how I phrase that. Yes, you will see them, but not as often. And what do I mean by that? What I mean by that is lower time frames will show more overreaction, right? Because orders affect the books a little bit more in the short term than in the long term, right? And to conceptualize that, think about Bitcoin, right? For me to cause a large wick on the daily time frame takes a lot more money, right? It takes a lot more money, a lot more capital, a lot more volume, right? And maybe specific conditions as well, right? Whereas on the 1 minute, oh well, look, we have 1, 2, 3, 4, 5, 6, 7, 8, right? And this is all within 6 hours, okay? On the daily, you don't see that as much, right? This is really big wick, maybe this, right? But these wicks are all relatively normal. This one is kind of crazy, right? But there are less. But yes, they do happen as well, and prices are fractal, so yes, you can choose to understand price on the 5-minute and extrapolate that to the daily, your execution changes, but that's a totally different topic, right? Your execution on a 5-minute chart should be significantly different from your daily, because of the time between trades and the time, you know, that you have to wait for things to play out, as well as your targets, and all of that affects the psyche a lot. So yeah, but sorry, to answer your question, yes you can. But yeah, anyway, thank you guys for tuning in to the FOMC stream. I hope you guys took something useful from it. I really do appreciate you guys. I do see you guys as like co-workers, you know, and I do appreciate you guys taking your time out of your busy days to hang out, chat shit, watch me freak out on the 1-minute chart. It means more than you guys know. I appreciate you guys a lot. Thank you, VS Luis, for recapping the stream. Bob John, somewhere in here, I appreciate you as well, brother. And I will see you guys Friday for the joint analyst stream. There is a joint analyst stream on Friday. Double check what time that is for you, because I have no idea what fucking time it is, but I'm pretty sure Trader Main, the neck, will let me know. So I'll catch you guys next time.